Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. A lot of news today, nothing like super huge, but a lot of smaller headlines. We, of course, have G20 on our radar for the next couple of days. Also, the Russell rebalance is tomorrow, so we're keeping that on our radar for today and tomorrow. But as far as today is concerned, we had that after-hours flash crash in Bitcoin, a couple of interesting earnings and ratings to discuss. And we'll get through tickers from the chat, as many as we can. And we have two guests on the docket for today. First up at 8:15, Marc Chaikin from Chaikin Analytics. And at 8:35, Evan Schnidman, the founder and CEO of Prattle, a text analytics company. They analyze Fed statements. He'll be on with us at 8:35. In the meantime, Joel, what is the word here overnight?
Well, we had some real nice gains overnight. In fact, we got up to 35.75. That was within a buck of Wednesday's interday high. So there's your bogey on the upside, folks. We got to get into this 29.40 handle, or else I'm looking for 2,900 pre-market low. Right at the low from yesterday. Also, your 7-day low or Tuesday's low, 14.5. That's your big level on the downside. Crude giving back some of its gains, down 54 cents at 58.84. Silver and gold, both in the red. Silver down by 11.5 cents at 15.26. Gold still holding 1,400, down $7 at 14.0840. And just as I was going to convert all my U.S. dollars to Bitcoin to help form the central bank, it falls $1,700 to 12,410. Triple D, if there's ever a time to be selling on the way up, I guess that was yesterday in Bitcoin.
I mean, we know, I said it yesterday morning on the show. I said eventually it's going to have, a huge down move. It's just been way too up, way too fast. It happened to have it that night. I mean, it fell $2,000 in a matter of minutes. I mean, this is the way this thing trades, at least right now. It went up 50% in a matter of 10 days. So what do you expect? So, I mean, it's going to move around. We know it's volatile. Things don't go just straight up without coming back down. I still think it makes new all-time highs. But like I said, I think, the path to get there isn't going to be smooth. It's not going straight there. So I think, if I was a crypto trader, I'd probably be buying the pullback, but I'm not a crypto trader, so I won't be buying anything.
How about doing the crypto ARB? I mean, I guess with the futures, I guess it's just that naked exposure on Saturday, right? Saturday and Sunday. So if you're doing the ARB,
well, it's hard to. You don't have to have the naked exposure. You can be hedged going into the weekend, but it's hard to hedge it up during the weekend.
There you go. Yeah.
So, I mean, you can always be hedged. I mean, but that's going to be fairly efficient. I mean, I'm not a crypto trader to be able to comment. I've never even made a crypto trade. So it's difficult for me to comment on the intricacies of the arbitrage between it.
Sure.
I can logically think about it, but it's not going to be as easy as, doing SPY versus S&P futures. I mean, you've got obviously some other things involved there. And it's trading at different prices on different exchanges. So it's, there's going to be that arbitrage opportunity. I'm actually probably more inefficient. It's probably a better opportunity than some of the arbitrage that I do. Maybe I should become a crypto trader. Thinking a lot. Maybe I should just stop trading stocks and just start trading crypto. I mean, I call Bitcoin pretty good. Maybe I should.
At the risk of derailing the show entirely, you could do that, Dennis, if the transaction tax goes through with Bernie Sanders.
Yeah, well, then they'll put a transaction tax on Bitcoin.
Okay.
So that's what I'll move on from. And this is a nice transition here. We're going to hear from Bernie Sanders here tonight. The one thing for me personally is I don't really care who the Democratic candidate is. It better not be Bernie Sanders. Because if Bernie Sanders somehow wins the presidency, and not saying he's going to, I'm out of a job. All you traders are out of a job. Everybody's out of a job because we know his main thing right now is he's bringing in this financial transaction tax. So just to sum it up, if you haven't heard about it, he's proposed 0.5%, 0.5% on every stock trade. So you buy $10,000 worth of stock, it's going to cost you $50 to buy it. It's going to cost you $50 to sell it. So he's basically bringing us back to the 80s when brokerages charged 1% commissions, because that's really what he's doing. I mean, it's going to make liquidity fall significantly here. It's going to make day trading impossible. It's going to make long-term investing very expensive. It's going to punish Main Street, not Wall Street. You see TD Ameritrade, you can forget about those accounts. Everybody at TD Ameritrade is going to be closing their account. You get a 0.5% transaction tax because it's not going to be worth it. You can't be profitable doing really any type of trading at those kind of costs. So long-term investing might still work, but it's going to be harder to get in and out of stocks. So there'll be more price impact. So if Bernie thinks he's just punishing Wall Street, he's not. He's punishing Main Street. Everyone with a 401k, when those institutional traders come in to move stock in and out, the liquidity is not going to be there. It's not, at least not going to be as easy to get in and out because there's no market makers that can be profitable at those kind of costs. Maybe they give some market maker exemptions, so maybe Citadel and Virtue get richer. I don't know. But if that gets pushed through, I know I'm out of a job. And a lot of other people, traders, are out of jobs. The odds of that going through are very slim, though.
Yeah, I think both Bernie getting into the White House and that transaction tax going through, I worry about a lot of things.
About this, DeFazio brought this up a decade ago. I've written multiple articles on it, and I've talked about it. It's never, really got traction. And, Eric Hunsader makes a good point, too, is we already have a financial transaction tax. On every SEC sale, there's a small SEC fee charged there. It is way smaller than 0.5%. I mean, it's one thing to put in a transaction tax, another thing to put 0.5%, because that makes trading cost prohibitive. It's just not worth it anymore. The SEC fees are obviously much smaller than that, but there is a small fee that's attached to every sale that you make. That's what keeps the SEC in business.
Yeah, SEC. I mean, let's move on because I just don't see it happening.
It's important for the listeners of this show and for everybody to understand that if Bernie Sanders gets in, he's trying to burn down Wall Street. He's not just burning down the bankers, though. He's burning down everyone that's got a 401k because it's going to be more expensive for your institutional traders to trade. It's going to cost everybody more money. Imagine trying to pay. Take us back to the 80s. 0.5% in, 0.5% out. It's 1% to break even. So if you go in there and you buy a stock like Nvidia, well, it's going to cost you. If it's 1%, it's going to cost you, basically $1.60 to break even on that thing. So, so you buy 160, you sell at 160, 160, you break even on that trade. Good luck making money with those kind of costs. And Spinner is right. I don't think he has a shot either. I just want to, make sure that we, as traders, vote against. In any regard here, we as traders do not want Bernie Sanders in.
Not only traders, but
investors.
Yeah,
investors too. I mean, because the same thing is what I was just saying is, your long-term portfolio managers, those traders that trade for those institutional funds are going to have less liquidity too, and they're going to be paying the same transaction taxes. So it becomes difficult. You think like the long-term, performance of the markets is what, 6-7% a year. Well, 0.5% will be gone just in transaction fees. So you're all of a sudden knocking your 401ks down 15%, from in their overall returns from what they've done before, on that basis. So it's very difficult to fathom how this would ever get through, but he's proposing it.
Well, you know what made me feel better last night? And I only watched the debate for a few minutes, but they also had technical difficulties. They had a hot mic that they couldn't find, and they had to go to commercial.
I saw Trump making fun of him.
So that made me feel a lot better about our gremlins. I was like, hey, it happens to MEC. It happens to me.
Happens to the best of us.
All right. Moving on here. Let's do KB Home. KBH earnings yesterday after the close. Q2 EPS 51 cents versus a 40-cent estimate. Sales of $1.02 billion versus a $936 million estimate. So a nice beat for the Q2 EPS and sales for KB Homes.
The Lennar quarter was decent too. These are actually similar quarters. It's funny though, because they are the second company to report and they already had it down on the Lennar numbers, expectations were lower. So they're like, oh, these are really good numbers. So they want to buy it up. So this is how silly the markets are. If you're the second company to report, you want the first company to not do well, because then all of a sudden the bar is set really low for you. If you are the second company to report though, and the other company does well, the bar is set too high. So basically you want to be if you're going to report really good numbers, I guess you want to be the first one to report. Or actually, no. It all depends on what the first company does. So Lennar gets the beats, you want to be the second one to report. KB Homes benefiting from being the second report. If it was reversed, probably be KB Homes down and Lennar up. That's how silly the markets are sometimes.
All right, just hanging out here near the highs of the pre-market session. Actually, you got an initial spike up to 25.35, and then you kissed it again just a half hour ago at 25.35. So not too far off that. Yesterday's high, 25.05. I'd say you take through that pre-market. Wow, a lot of 25.5 too. I don't know. This thing's gonna have to prove to me I want to go through 25.5, and then things open up to 26.5. But just multiple highs on that in that area on the downside. If you're looking for a gap fill, which you could easily do, the top of yesterday's range, 24 even.
Got a little rally going on in the markets. Okay, let's continue on the earnings parade here. We got Walgreens. They report.
We did get Walgreens. Let me pull that up here. That was just about an hour ago. The Q3 adjusted EPS for Walgreens, $1.47 versus $1.43 estimate. Sales of $34.5 billion versus $34.47 billion. So a beat on both numbers. They reaffirmed their fiscal year EPS guidance for the current year, and that sales are going to be flat, or that the EPS will be flat on a year-over-year basis.
What a sleepy chart here. Holy
I mean,
man.
this is really, yeah. I don't know what the expected move was on this, but anybody who was, expecting a big move off of the Walgreens, I don't think. Well, I guess you did get it back in March. You got a big move down, but CVS and Walgreens, look at these two charts. They look identical, Joe. They've just both been sleeping, kind of doing nothing. They've kind of both been Amazon to a certain extent here. I can't just see jumping in and buying these things, because I do think Amazon is obviously, we know they're coming for them, and I just don't know how long before it starts to price in even more. So maybe they look like value stocks at 3.31% dividend, CVS 3.71% dividend, but I still think they're value traps.
Yeah, look at the WBA. You are trading in the green here. I think I'm just going to go to that gap down area, and I think I could just 56.44 was the high when you gap down in March, early April, and you really haven't even sniffed that yet. So until you can get back over that area, I don't know. It's just tight. There's really nothing to say about this one. Low of the move, if they decide to hit it, you got a pair of lows at the 49.40 area from the end of May and early June.
And since we're on the Walgreens train, I guess might as well hit Rite Aid, which is, I think we had sworn off to talking about this one.
When they reverse split it.
A quarter, right, exactly. So it's no longer a dollar stock. So I'll give you the numbers here on Rite Aid from yesterday after the close. Q1 adjusted EPS, they lost 14 cents versus a 7-cent loss estimate. Sales of 5.37 versus $5.38 billion. So an EPS miss, sales miss for the first quarter. The fiscal year guidance was reaffirmed. They're going to lose money this year. Sales guidance reaffirmed. They're going to make around $21 billion.
CVS, Walgreens, whoever you want to pick is, more best of breed. This has always been worst of breed. Why do I want to own worst of breed? This is what happens when you own worst of breed. For years, Walgreens has just went straight down. Obviously, the reverse split makes it look a little bit more. But I go back to 2017, the stock on a reverse split basis was trading at $175, is now $7. So I have no interest in owning Walgreens or Rite Aid whatsoever.
I'll just give you the old time low after the reverse split, and that was made just a couple days ago at 614. You are holding above yesterday's low at this point at 650. So keeping an eye, old time low 614 in RAD. On the upside, I'm sure a lot of people would like to see that close of 7-11. Actually got a Slurpee last night at 7-Eleven. What a segue. I should have said that, but I did, man. It was hot here, and I had to stop at 7-Eleven and get a Slurpee.
I haven't had a Slurpee since I was a little kid. They're still the same? What color did you get? What color?
I do the cherry and the Coke combo.
Oh, that's a nice Slurpee right there.
Yeah. Is 7-Eleven, is that private equity?
I miss Slurpees.
Who owns 7-Eleven? Is it private equity?
Oh,
do we know?
I have no idea.
Okay, ask Google. Google always knows.
I am asking. Okay, well, while you guys
do that, Siri.
Okay, while you guys do that, I'm going to bring on
7-Eleven. All manages.
All right, while you do that, Dennis, I'm bringing on
Japan is in Tokyo.
All right, I'm bringing on Marc Chaikin, our first guest of the day. Marc Chaikin, the founder of Chaikin Analytics, joins us every other Thursday. Marc, are you with us here? Good morning.
Good morning. I am.
How's it going?
It's going well. I love this new format.
Oh, thank you, thank you, thank you. So,
Let
Marc,
me turn my camera on here and
Oh,
look
look
at
at
that.
There it
Mark.
is. There
Mark
you
going
go.
hey,
high tech on us.
high
I
tech.
like
Yeah,
that. I like
early in the
that.
morning.
Yeah.
Easy, guys.
Mark, if I could do Zoom, you can do Zoom.
We've been using Zoom for 2 years. I think we empowered that whole IPO. We switched from GoToWebinar to Zoom 2 years ago.
And we switched from Skype to Zoom here now too. So we're all fans of Zoom.
Yeah, it's really fabulous. Probably a bit overvalued in the market, but
It could be a good segue. What do you think of these IPOs? I mean, we've had a lot of action since the last couple of weeks you've been on Beyond Meat. Had the big run to 200, the short squeeze, and obviously come down significantly since then. Zoom has fallen off. The luster has fallen off of a few of these newer issues. What are your thoughts? Let's talk Beyond Meat and let's talk Zoom.
well, there are some great companies in here. Zoom is a great company. I think Slack is a terrific company, but if you pay the spike prices after the offering or after an earnings report, you're nuts. Now, Zoom has come back down and filled a nice gap, but I don't know what the valuations are on these. You're taking a crapshoot, and you know me, that's not the way I like to deploy money in the market. It's a great company. I think you've got to put some of these on your watch list. Give them time to breathe. Be aware when the restrictions run out on insider selling, because you do get a wave of selling roughly 6 months in. Be aware of that first earnings report. In the case of Zoom, it was great. So the stock spiked up. Sometimes they're going to be disappointing and you're going to get a lot of selling, but there are a lot of benchmarks along the way in these new issues that are either landmines or opportunities, but more often than not, they're landmines.
Marc, so we are finally back at all-time highs, or I guess not today, but we were a couple days ago now. So all-time high, hitting every time we fall, the bears come out, you think, okay, this is going to be the big one. This is going to be the big one, and it's not. And this market is just so resilient. So what do we do here? We're back at all-time highs again for like the 100th time. What do you do here?
Well, it's the third time, and sometimes the third time is the charm. I think you buy the dips. Now, obviously, we're a bit hostage to the Xi-Trump meeting that's coming up on Saturday as part of the G20. You saw the volatility in the futures markets this morning, initially when it was looking like they were presenting a list of reasonable demands to Trump. The future spiked up and then reality set back in. But the bottom line is the Fed's now out of the way. The market got what it wanted last week. You've got to buy the dips. And there's a pattern that's emerged here that's really powerful. 8 out of the last 9 times since 1980, when the bond market is up 5%, and the stock market is up 5% in the first 6 months. 8 out of 9 times the market is up 6 to 12 months later. Here's the number: median gain 12%. So whereas most Wall Street analysts have topped out their projections at 3,000, I think Ed Yardeni is at 3,100. That could project to 3,250 on the S&P. There's a real possibility that this market goes a lot higher. It's still the most unloved bull market in history, in my view.
Marc, we don't talk much fixed income on this show, but have you been watching what's happening in the bond market of late? And do you have any comments there?
Well, I think the bond market is continuing this trend of being the best of the sovereign debt markets. When you've got $13 trillion of sovereign debt in Europe and Japan with 0 or negative interest rates, a 2.4% yield or a 2.2% yield on the 10-year Treasury is going to attract an awful lot of interest. And that's what's been happening. I don't think this yield curve inversion means very much. It certainly doesn't mean that the bond market's predicting a recession. That really flies in the face of all the employment data and everything we're looking at. So I think the bond market is going to be what it's going to be. I suspect that interest rates are going to start bottoming out and bonds are going to start topping out here. But the good news is that the fact that bonds are up 5% over the first 6 months, stock market's up a lot more than that, projects out beautifully. And by the way, we got another mini bread thrust a week ago to build on the Zweig bread thrust that we got in January. So everything is pointing in the direction of higher prices.
Believe it or not, we're actually like 2.5 weeks, 3 weeks away from the start of the next earnings season. Banks typically kick it off, and they're all reporting the around July 14th, 15th, 16th, that range. So, Mark, give us your thoughts. Now that, well, we've been past the bulk of the Q1 earnings season now for a while, but what are you feeling ahead of the second quarter earnings season, just broadly, and then we'll get more specific.
So number one, expectations are low. People are looking for 2.2% drop year over year in earnings. So that's a good thing going into earnings season. It creates a lower bar, which is what happened in the first quarter. I think company guidance is going to be absolutely critical. We saw that, I think it was yesterday or 2 days ago when FedEx reported, Lennar reported. There was one answer to one question on the Lennar conference call that tanked the stock. Everything else about the report was great. So guidance is going to be critical. And I think a lot of company managements are going to use the tariff wars as an excuse and guide a little bit cautiously, but I don't think that's going to kill the market, because depending on what happens in these negotiations between Xi and Trump, we could be looking at a different forward-going scenario. I think this earnings season is really critical to getting the market moving above 3,000, and we'll have to wait and see. First quarter market surprise to the upside. We saw what happened. 16th, when JP Morgan reports, we'll know a lot more.
Well, expectations were low last quarter. They were extremely low last quarter, and it was a low bar to hurdle, and we did. So just same story again.
Well, the tariff situation is a little more impactful this time around, but yes, I think the same situation again. Look what happened to Micron, who beat estimates that had been coming down day by day. The stock spiked up yesterday. So I think there's the opportunity for companies to outperform. I think it's going to be very industry specific. So insurance is looking great, software, aerospace, defense. I think one of the interesting things about the market, JP Morgan commented on it yesterday, is that the consumer staples and utility stocks have led this market higher, not the cyclical growth stocks. But I think that's going to get unwound, and I like that. I like the group rotation. I like the fact that the market made new highs with defensive stocks leading the way, which is highly unusual.
All right, first half of the year, wrapping it up here, the worst performing sector in the S&P is healthcare. A lot of consolidation in this space. I think there's more than double the amount of M&A deals in healthcare year to date than there was all of last year. So what thoughts on healthcare here? The sector is up like 6% on the year, the worst performing, like I said. But what do you do with healthcare here?
I think it's highly selective. Medical products, very strong group. Stocks like Brucker, Hologics look really interesting. Some of the conventional drug stocks, not so interesting. And biotech is clearly in M&A fever. And so anybody who's got interesting phase 2 pipeline drugs are potential buyout candidates from the big drug companies. AbbVie has their biggest drug, Humira, coming off patent. So they were looking for an acquisition, and they went after Allergan. I think you've got to really pick and choose here. The healthcare providers are under pressure because of the Democratic candidates weighing in on, single payer or healthcare for all and so forth. So there's a lot of uncertainty there, and that's going to persist. But I think in biotech, if you know these companies well, you know where some of the attractive drugs are in the pipeline and the FDA approval process, that's pretty interesting in healthcare. And medical products, very, very strong.
Can you give us any new bullish or bearish names that the power gauge has changed direction on in the past couple weeks?
It's really been a continuation of where things have been. There hasn't been a lot of deterioration. I know we were talking about Boeing earlier. Boeing has a bearish power gauge rating now. You've got bearish power gauge ratings continuing in Netflix, NVIDIA, which has been strong recently, in the hopes that there'd be some sort of trade resolution. Unlikely. I'd be selling those stocks, but it's a continuation. Stocks like Progressive, the Hartford in the insurance space, Leidos and L3 in aerospace, HEICO. These are some names that you don't normally hear about, which I like. And in selected technology stocks, you're starting to see better action. Software, continue to love software. Synopsys, Cadence. You got great reports out of Adobe. So there's a groundswell of interest still in the software stocks, and that's where I'd be looking for opportunities.
All right, Marc Chaikin is the founder of Chaikin Analytics. I can't say enough good things about his platform, the Chaikin Power Gauge. If you're looking for a high-level bullish bearish rating on individual equity and ETFs, they do ETFs now, which is my thing. Can't recommend the power gauge enough if you're looking for just getting the general sentiment based on a whole bunch of factors. It's a really great tool. Marc Chaikin, thank you for joining us, and we'll talk to you in a couple of weeks. Have a good one.
Yeah, that's great. By the way, Sandy's doing a webinar tonight on the 5 biggest mistakes investors make. I think that's really critical in the markets going forward. Mainly, don't listen to the headlines. So that's something that some of your viewers may be interested in.
You hear that, Dennis? Don't listen to the headlines. So ChaikinAnalytics.com.
From an investing standpoint, I agree with that. From a trading standpoint, I like to read the headlines.
Yeah.
All right, guys. I'm off to Connecticut for the summer, but I'll be on the grid and
all right.
Deep in the country with the cows in the background.
All right. Have a good one, Marc.
Yeah, see you.
All right, 8:28 here now, and I'm serious. I can't recommend the Chaikin Power Gauge enough. If you're looking for a gauge of sentiment based on 25 different factors, if you don't know how to feel about a stock, it will point you in the right direction more times than not. So 8:28 here, Joel. Anything funny happening around in this market, or are we just kind of hanging out? Oh, Joel is on mute. Let's try that. Joel, are you with us?
On mute.
It's okay.
He's scratching his head now.
I'm here.
There he is.
You hear me? Yeah.
Yes.
Lost the old Zoom control here. We got a little rally going. And boy, we've been working this 29.20 handle, been working it hard. And this is going to be our area of contention. We're mid-range on the session right now. So coin flip right now, pre-market high, right up there with yesterday's intraday high, and the current low right there with yesterday's low. So we're just stuck in the middle here. Really nothing. We'll see what happens. We got imbalances, but now that we cover imbalances, they don't give any good imbalances.
I haven't. In other words, they said they talk about them all the time on the pre-market prep show. So institutions aren't going to show any hands anymore.
All right, institutions.
That edge too.
Maybe they could just put them in the chat, because we know they're out there listening, whether in the Google chat or the pre-market chat institutions. Just give us our orders, put them in here, and then we can just go direct. But let's move on. Well, we got a few seconds here.
Yeah, 20 seconds for the imbalance data here. Just say, you're right. We're rallying a little bit. I mean, we've been choppy overnight. We were up significantly, and then we got some Chinese comments there come and knock the market back down, and we're starting to lift here again. Chips showing a little bit of follow through strength here today. We do have a note out of Wedbush. They are putting a buy rating on AMD, a buy rating on NVIDIA, and a sell rating on WDC, and a sell rating on Intel. I'm in all those stocks as day trades, some as long-term investments. So we know I trade everything. So imbalances, if we just jump back over to there, what do I see? Oh, wow. Well, your GE guys always there, 130,000 shares to sell, GE. Bank of America, 57,000 to sell. AT&T, 97,000 to buy. Oh, wow, they're so small. Taiwan Semiconductor, 34,000 to buy. Man, they're small. Don't see much.
And Q1 GDP was in line. So a quiet 8:30.
Crickets. We need action. Give us some
Dennis
action.
didn't even hop off for the GDP number.
I didn't even know it was coming. That's how much I cared about it. I didn't even know it was coming.
3.1 versus 3.1 estimate. We are going into a full-blown recession here. I think they need to take rates down just a point.
That's Joel's sarcasm.
Let's take them down a point. I mean, we are in a recession with 3.1%.
I still don't understand how they were
Uh,
talking about taking them down half a point. People are with us saying,
yeah.
what happened? What
I
happened?
don't
since
know. We
December?
went to sleep or something.
We
I
raise,
don't
we
know.
raise, we raise, and then we now have to cut. I don't understand the Fed at all. Anyways, we move on. We've already had this conversation
100
lots of times.
times.
All right, Boeing here.
Boeing.
Yeah, Boeing had another. Just when you think it's gotten quiet for a while, another 737 Max headline. This is a report from Reuters yesterday that the FAA had found a new potential risk that Boeing has to fix before they can return the 737 Max planes to service, and it was discovered in a test last week.
Oh man, stock 374.94 close. This was down $20 this morning, guys. It's come off the lows significantly, but was I right with 352? Did I see it?
Oh, lower, dude.
Where'd
Lower.
it go?
I got 347.37.
Holy mackerel, 27 points this was down this morning. Obviously, seller's remorse to whoever was selling it on those headlines there, because it was obviously come significantly off those lows. Still down $10. Still going to weigh on the diamonds. Remember, DIA, it's a big component of that, so that's why your DIA is trading in the red. Also, XLI, if you're an XLI trader, that's what you like. That is why it is in the red as well. It is a significant component in both of those indexes.
Wow, did you see that wicked consolidation here over the last 5 trading sessions? Obviously, I'm just looking. I know you sneaked up to 378.98 yesterday, but it looks like 370 to 376 is where you traded a ton of stock over the last 3 days. I'll use that 370 now, that old support area as resistance. You're not too far away from that. But wow, wicked consolidation. Then you have the news knock it down. And but for the shorts, I mean, that have been getting squeezed on that was just too good of an opportunity. Shorts come in and buy it up, still trading in the red. But boy, issues abound in this one.
Good point by Spinner here, bringing up the second round of Fed stress tests coming out today. Remember that.
What time is that? After the bell?
Oh, I don't know what time. I'm sorry, but I think it might be midday. I honestly don't know. Brent, do you know what time the stress test results are being
They
released?
often come out. They used to always be.
No, he doesn't know. Remember that Deutsche Bank's U.S. Business was the only business to fail the last round of stress tests. So the only of the banks that were tested. So watch for DB today. I wish I could tell you what time, but I don't know what time they're coming out.
I think it's after the close.
Okay.
It usually is right after the bell, and they will move individual stocks. Like if some fail, you will see some movement go both ways. So it was interesting last time. There was some fireworks from that, so that's good to know.
Oops. Okay, so 8:34 here.
We have one more guest.
Yep.
Just before we go to the guest, we didn't get Accenture's report. We almost got them all covered, but we didn't do ACN. It's down $4 here. Quick numbers, ACN.
Okay, ACN.
We're gonna do this in 30 seconds.
All right, ACN reporting this morning Q3 EPS $1.93 versus $1.89. Sales 11.1 versus $11.04 billion. But the headline is they raised their guidance for the fiscal year. The EPS guidance was raised by 10 cents from $7.18 to $7.28. Again, that's the fiscal year EPS. The Q4 sales guidance was in line. So earnings beat guidance raised for ACN.
Raise. So it would look good just if you just take this and just say, okay, at face value. But the stock was $132 at the beginning of the year. It's $183. Had a big run already. In the last couple of weeks, it's been up to obviously a decent run in June, 175, 185. Expectation simply too high. That's why it's trading down on the good numbers.
You did. I mean, this is interesting because it sure looks like it's not going, it's done, it has more to go on the downside. Parallels right here at 179. That's kind of where you're holding in the pre-market. The only thing is you got a little trap door. You lose that 179 and you could be trading, 175, 176 in a hurry. So looks like you got a big seller out there and he ain't done yet.
All right, I want to bring on our second guest of the day. I hope he can join us because I know he was having some microphone issues. But Evan Prattle, he is the founder. I'm sorry, Evan Schnidman is the founder
Evan
of
Prattle.
Evan Prattle. He's the founder of Prattle, a text or language analytics company that actually just got bought a little while ago by LiquidNet. Evan, are you with us?
I'm here. Can you hear me?
I can hear you. Good morning. How's it going? Long time no talk.
Yeah, good morning to you guys as well. Glad we worked out the technical issues.
Yep. So, Evan, I actually I feel like we should have had you on sooner because what Prattle does is, and you can correct me if I'm wrong, but my understanding is that you parse through written and verbal statements and analyze the sentiment very quickly. Is that the gist of it?
Yeah, we analyzed the content of market moving language from both central banks and corporations.
Okay. So, central banks. I'm glad you brought that up. In case you hadn't heard, we had a bit of a meeting last week, an interesting meeting. What was Prattle saying about about Jerome Powell's remarks last week?
Yeah, so Jay Powell was, as expected, basically spot on neutral, just a little bit positive actually. And so, what we've seen since that meeting has also been quite interesting, right? So there's been kind of this smattering of both hawkish and dovish communications, lots of speeches this week, and nothing that tells us that the Fed won't cut rates next month, but frankly, less definitive support for it than I think the market's been expecting.
All right, so here's what I want to know. Are there keywords? Can Prattle identify like the keywords? Because it seems like every time we go through this dance, the market keys in on like a word or two or three that Jerome Powell said or didn't say or added or removed. What were the keywords this time?
Yeah, so this time around, it was very clearly the number words. There's a long tradition of vagaries around anything quantitative. So last week, it was very much a focus on some and most. The word some, essentially, there was some support for cutting rates, and that most participants expressed that support.
So we're parsing through vagaries here, and okay, so that's fine, I guess.
Believe it or not, this is the world of
Yeah.
analyzing Fed speak. And
Yeah.
the beauty of the way our system works is that because we're not just looking at individual words, we're not just looking at individual phrases, we're looking at every word, phrase, sentence, paragraph, and how they all relate to one another. We're not just keying in on that individual word that maybe the market obsesses over, but we're actually looking at all those breadcrumbs that lead us there. And so keeping track of all the speeches in between Fed meetings can really point to where policy's headed.
All right. There's been a lot of criticism of this Fed regime for, as you just said, being wishy-washy with their statements, going back and forth, dovish, hawkish. Has the Prattle Analytics has that backed that conclusion, or is this something that is really not as big a deal as we're making it out to be?
I think this really is not that big a deal. This has been pretty clear. It's been pretty clear that the Fed is doing what the Fed does. They really haven't stepped out of line. I think that the December rate hike was heavily criticized by the financial markets, but the reality is the underlying economics support it. The big question we all have to ask ourselves is, at this moment in time, what are the underlying economics that support a rate cut, and should we be worried about that? Because that would mean that economic growth is decelerating. The labor market would be, not as strong as we thought it was. That inflation might be still below target. These are all things that are very real threats to growth. And if the Fed actually does go ahead and cut rates, that's not a positive sign. I mean, the financial markets might respond to it positively for a few days, but historically what that means is the financial markets will actually sell off shortly thereafter.
You mentioned Prattle also analyzes corporate statements, and so it seems like we've been waiting for the CEOs at large to come out and blame tariffs, and some have done that, but I don't feel like to the extent that maybe people thought they would. FedEx has done that. Tim Cook has come out and blamed tariffs, and the CEO of Urban Outfitters as well. So we've had a few examples of CEOs coming out on the earnings calls and directly attributing performance one way or another to tariffs, but not, I think, on a large scale. Is that conclusion backed up by what you've seen?
Yeah, I would say that that's right, and I'd say that I might even take it a step further, which is that when corporates have talked about tariffs, they've been beat up in the market for it. I think the example last year that's great is Caterpillar. Q2, their earning, first of all, they had record earnings all of last year because heavy sales to Asia, in particular to China, ahead of any tariff barriers. And by Q2 of last year, their CEO used the phrase "high watermark" in a earnings call, and the stock got really badly beat up because basically the phrase "high watermark" was misinterpreted to be about their stock. What he meant was about the macroeconomic picture, given the fact that there were these tariff barriers coming down the pike. And so when the problem is that because we live in a soundbite era, people key in on any negativity, even if it ties to the macro picture and not to that company's own stock, and really beat up the company for it. And so I think a lot of executives, CEOs, frankly, CFOs, IROs, they've shied away from talking about this too much in their formal communications because there's really no upside to it.
But generally speaking, okay, so that's a really good example. I'm glad you brought that up. Generally speaking, have they been super critical of tariffs, or have they been just observing it and saying it's a thing, or like what's been the general sentiment from the CEOs if and when they do bring up tariffs?
Yeah, so I mean, quarter over quarter through all of last year and into this year, what we've seen is language around tariffs has the amount tariffs have been talked about has roughly doubled quarter over quarter since the start of last year. So we're still seeing a massive acceleration in how much people are talking about it. What's interesting is where they're talking about it. It's not getting brought up in the prepared remarks on an earnings call. It's basically not showing up in regulatory filings. It's showing up in Q&A. So analysts are bringing it up, and it's showing up in press releases. It's showing up in other corporate communications. So they're trying to make it less formal, and they're frankly trying to avoid talking about the subject. When they do talk about it, it does tend to be pretty negative, in that no one thinks this is, there's very few industries where this is net positive for their business. But even the industries that are hardest hit by it, so the industrials, for instance, we're not seeing overwhelming negativity. What we're seeing is we'll weather the storm is a lot of the types of phrasing we're seeing.
And what kind of communications are you picking up on Bitcoin now that
Jesus.
now that there's talk of a central bank being formed?
Yeah, so we are not tracking anything on Bitcoin right now. We've played that game in the past, and what we've discovered is that we can identify when there's going to be increased volatility. The direction of that volatility is pretty damn tough.
How can you identify that?
Oh, just by chatter on believe it or not, actually, there's Bitcoin is one of the oddities of it is there are so many forums where people are talking about it. But there's still a pretty thriving Reddit community, and even just off analyzing what's on Reddit about Bitcoin, we can identify that when chatter is elevated in certain ways, there will be more volatility. The problem is that we can't get a good directional signal because the market is still dominated by too few investors to be able to key in on what direction that investor might be going.
Can you run your analytics on Benzinga's PreMarket Prep show?
Please don't do that.
The answer is yes, we can do that, but I don't know that you're going to want to see what we have to show you.
Yeah.
I don't know, man. I love some objective, some some critique. But yeah, all right, that'd be interesting.
Evan, Prattle is, I guess the tagline of the company is language quantified. I think you need to change it to we listen to conference calls so you don't have to, because those can be pretty dry experiences. But Evan Schnidman is the founder of Prattle. Like I mentioned, they were bought a month or so ago by Liquidnet. So congratulations again, Evan, on that. And again, if you are looking for sentiment on corporate Fed speak, really no one better to do it than Prattle. So Evan, thank you so much for the time today, and have a good rest of your day.
Yeah, thank you guys.
All right, 8:45 here, guys.
Yeah, I mean, we are quiet here. I mean, holy moly, we got a little.
For all the volatility we've had overnight, the last hour and a half here has been pretty quiet.
What do you think? The overnight traders, you think this is when they get their snooze in or something? You know, they're like, nothing's going to happen during the
we know all the big moves seem to happen overnight. We've talked
Sure
about
do.
that before, when obviously you don't have stocks, you open, you get 8 to 4 on the U.S. markets. Its futures are free trading, really, right then. You can trade a little bit off Asia, but for the most part, you're not, seeing a lot of other stock action to move futures around. So it will move more easily in those times. Liquidity is lower. As you get past 7 o'clock, more and more systems come online. The price discovery from overnight has kind of been priced in everything that's happened. But we had crickets from the GDP number. We've had, we had, after the sell-off from the comments coming out of China, it's been quiet ever since.
Let's talk autos here. We haven't talked about them in a while.
Big note from Credit Suisse.
Yeah. Spencer, you got any details of that note, or should we just?
I can give you the ratings. Highlights. They initiated
1 million stocks.
Pretty much everybody. I don't know. So initiate GM outperformed, Ford outperformed, Tesla underperformed. Price target on Tesla $189. What do I got? What else do I got from this note? As far as autos, those are the big three. So, bullish GM, Ford, bearish Tesla.
And
we also had BWA, American Axle.
Yeah, they had a few others.
But, I had a whole bunch of them too. So obviously the big ones. Ford, like you were saying, Joel, had independent news here this morning too, cutting some expenses. It is getting back up over $10 here this morning. Big psychological level, 10.05, showing life. This note is not that influential because Tesla's not even trading down. They put an underperform rating on it, but it's actually trading higher here. It's up a little bit here, so completely being ignored by Tesla. GM and Ford are both trading a little bit higher, but Ford had that independent news.
Yeah. Well, first of all, GM, I wish they would have told me this like 2 weeks ago here, because it's had a really nice run from the June low, not really reacting to this news. 38.50 was the high from yesterday's session. You want to keep an eye on that, because you got another daily high at really nothing there. I use 38.50. It gets through 38.50. Take a look at 39, just under.
But you got to start analyzing from risk reward here too.
I'm
not buying that 40 is like the Rock of Gibraltar up there. We couldn't get through it back in April. We kissed through it a couple times, but now you look at it and you think, okay, I'm coming here buying GM now at 38.30 off this Credit Suisse note. It's up in the last month from 33. That's a big move for a big stock, and obviously the stock trades off its dividend too, which is now only 3.96%. I don't know. I feel like the easy money's been made. I feel like Credit Suisse is late to the party on this. Where were they at the beginning when the stock was $33? You come into 40, you got all kinds of overhead supply there. Couldn't get through it back in February. Couldn't get through it in April. I don't know what your upside here is. Maybe $1.50 from these levels, where your downside is where you came from. So I don't think it sets up that well.
Yeah, let's go green, on this, and let's go green, and let's take out yesterday's high, 38.50.
It might, from a day trading perspective, it might.
Yeah.
But from an investing standpoint, I feel like you're late to the party.
Ford's trading at 10.06. Maybe you get another 14 cents, 15 cents out of this. I see 1, 2, 3 highs is called under 10.20. The book is probably just absolutely littered.
And we know the 10.50, like that level was just, there's like over, probably 1 million shares up there. I can see 678,000 right now, but it's probably bigger than that even. And, right in front of it, right behind is another 130,000. The book is just littered with sellers, but it always is thick, so it can chew through it because it does trade some volume. But the level on this has been 10.50 forever. We tried and we tried back in May multiple times to get through it. We could not. Finally, we started to break down. 10.05. So, you get 45 cents upside here, and in a good case scenario, I think. It's not that
You
great.
need some like news. You need something to shake these.
What's really going to be the news is going
Yeah.
to drive forward, though. I mean, it's trades like a bond right now, 5.96%. It's got a dividend. It's, obviously it's been beat up. I don't know long term. I had Ford in my long term portfolio for a long time. I sold it, took the tax loss last year on it. Reason for doing that is, one, I needed some losses because I had a pretty good year. Second thing is, I'm just not a big firm believer in the big autos anymore. I mean, we've had the environment for them, and obviously if interest rate starts going down, the environment gets more attractive again. But I don't know. I mean, these things were making record earnings and the stocks weren't responding to it. So what's really the driver to take you to $20, $30 again, like the long-term story? What's the driver to take you there? I can't figure it out.
It's an electric car. That's like the only drive.
But they all got, and Tesla's still the leader there.
Sure.
So yeah, electric cars. Okay, great. I mean, well, you could make, a lot of money on your gas guzzling car. Is it going to make them on electric? Is it going to be efficient? The employees make a lot of money. It's hard to get by those costs. So yes, they make money, but they've never rewarded the stock even in its best years, and which were recent. So I don't see why they're going to reward the stock, in years that is maybe not doing as well. And I still think there's competition. And I still think I'm still a somewhat believer in the Tesla story here too. So I don't know. I'm out on Ford. No interest.
I'm just looking at Tesla here. Sleepy consolidation here. Pretty tight ranges. Really going back to June 18th, you've been, for the most part, 216 to 225. You had that little bump to 234.74 here, but Tesla taking a breather after a big old decline and then a rally. So you bulls out there, man, you want to get this thing above 235 into the 240 handle. Kind of looks like it's getting ready to roll over again here if you're just basing it on the monthly trend, downtrend here. You do have a green candle going this month, but sleepy consolidation here in Tesla.
I know we talked about it already, but Dennis said late to the party. You want late to the party. This Wedbush note, I mean, AMD had outperformed now? I mean, okay. NVIDIA got initiated this morning at outperform as well. They also initiated Intel at underperform, Micron at neutral, Seagate at neutral, and Western Digital at underperform. But to initiate AMD at outperform now, I don't know.
It does AMD likes ratings, and they do respond well to them. I'm actually surprised it was only up 30 cents. I was long the stock. I've sold it. I bought it on the rating change there, or the rating last night. I've sold it. I actually shorted the Western Dig and the Intel against it too, but just because of AMD, I just basically I went long the two that they were going and short the two last night when that note came out just after the bell. But now you look at it, and I don't know. You're priced in somewhat because AMD's up 1.3%, NVIDIA's up 1.7%, and then you got Intel and Western Dig basically trading flat. So it's kind of, that arbitrage is kind of gone now.
Yeah, they good support here. I mean, we're trading at 30.31. Made multiple lows under 29, but now that we're in the 30 handle, we got to look for resistance and bump. Let's see its take out yesterday's high at 30.48, and then things really open up to the 31.
Show life. It wants a catalyst. Is this a good enough catalyst? I don't know. NVIDIA and NVIDIA's been on a run too, but you're right, Spencer. They are a little bit late to the party. I mean, NVIDIA a month ago was $130. It's 162 now. So again, you're coming late to the party. AMD is more interesting because it pulled back so significantly. I tried it once already, on a swing trading perspective, got shaken out, but it's starting to try to show some life here. I think if any stock's going to go of the chips really continue, I think it could be AMD. So I don't mind the AMD call here. We know Intel, has had a hell of a run here, really from the lows, but you get up near 50, and I think you're running into trouble in Intel too. So I don't know. I'm torn on this note.
Do you want to do the Intel battle with after hours and the ratings? Didn't you mention something
No,
about?
I just found it was interesting because Wedbush came out last night, put
Okay.
the sell rating on Intel, knocked it down, and then Fast Money was pumping Intel. They had a chartist come on there, and he saw significant upside in Intel, and they started buying Intel hand over fist. So Intel actually ends up going green, despite Wedbush putting a sell rating on it. So it's interesting, we get Fast Money going directly against an analyst report. And obviously, they probably didn't even know about the analyst report when they were giving those commentaries, but we know because we're watching the news and we're watching the headlines. So it's interesting. Fast Money was pumping it, and Wedbush was dumping it, basically. So we'll see who wins today.
All right, going back to the analyst notes. So we just talked about one that was a little late to the party, a lot late to the party in AMD. Here's one that is early to the party. Wells Fargo upgrading CenturyLink CTL this morning to outperform. This is one of the worst performing S&P stocks of the year. I think it's like the 7th or 8th worst performing S&P stock year to date. So an outperform rating on the CenturyLink this morning from Wells Fargo.
It's a stock. It's got an 8.9% dividend, and I don't know if that's safe or not. It's been there forever. It keeps getting bigger. Its chart is awful. You're right, Spence. This is a completely contrarian call. I mean, this was a $45 stock back in 2014. It's $10, $11.21 here in the pre-market. It could kickstart a little bit of a squeeze, maybe if people playing trends. Maybe it's a counter trend call. Those are always dangerous to short. So I don't know if I'm coming here necessarily just shorting 11.21. I'll tell you, it's probably going to be thick on the way up, but this could give it some life for a couple of days. But it seems like when you get these stocks in serious downtrends, and then they get a call, a bullish call coming out, like look at the PYX. We talked about this a couple of days ago on the show. I mean, it gets this ridiculous call from Imperial with a $71 price target. Stock goes up basically 25% a day. Goes from $13 the day before up to $18 the next day. And here it is 2 days later, and it's given back 2/3 of those gains. It seems like, I don't, and CenturyLink hasn't rallied much yet, so maybe it shows some life, maybe it gets a little bit more life. But it seems like when the dust settles, the trend is still your friend, and the trend on CTL is down. So I'm a seller of rallies, although this hasn't rallied enough yet. This could end up getting up to $12. Then I'd be interested in selling the rally.
Let's see. I mean, I might get interested here over 1150. I see bunch of highs from 1138 to 1157. That points out a seller to me at the 1150 area. So getting a little bit already up 31 cents, but above 1150, I think it could be rally time for this one. And I don't know why I just thought about this, but Red Robin. Remember isn't it just getting taken out at 40 or something like that? Private deal.
Yeah. This one's going off the board.
It is at
Isn't
40.
it?
No.
We
After
made the 40 price up here, Joel. But I
no, I
believe.
didn't. No, someone said they were going to take this private at 40, and then.
Oh yeah. That was rumor,
Yeah.
but it's not getting taken out. This was just rumors.
Oh right.
Right.
That's
I
right.
was saying
That's
on the
right.
show here too. I said this. I was the one that was saying this.
I know.
$34, $35. They said it was ridiculous. And I know, I took the opposite of Karen Feineman. She was saying she's coming here buying 33, 34. And I didn't trade it. I should have. I forgot about it. To be honest with you, I haven't thought about it in a week and a half. But it traded up to $35 on speculation that somebody might buy for 40 on that horrible. And it was it was somebody that already owns shares of it. So they're just talking their book like a curl icon style. So I'm not surprised this thing has already given back 5 points from those highs. And I don't think there was nothing to this. So I don't think it's going to get taken over. And, I think, this was a stock that was in the gutter from its earnings report, down $26.
Exactly.
Activist talks it up, talks a big talk like he's going to take it private. Some people actually fall for it, in my opinion. And I don't believe it's going to get taken private. And I think, I think it was a good selling opportunity for anybody who took advantage of those prices.
Going back to the ratings here, D.A. Davidson upgrading TripAdvisor TRIP to buy this morning, announced a $55 price target. Goldman Sachs had 3 downgrades here. They're downgrading Ross Stores to sell, a $91 price target there, downgrading Nordstrom to sell, $30 price target, and downgrading FactSet, so a different analyst you would assume, to sell $246 price target. So the Ross Stores and Nordstroms are probably the most interesting downgrades there of the 3.
I mean, Ross Stores, the contrarian call stock, has been doing really well. It is down significantly on this, not surprising. Nordstrom down, but Nordstrom's been in the gutter. So let's see. Nordstrom's got to hold $30. That's the big line in the sand for Nordstrom. The big department store, though, I mean, these stores, we know they've had all kinds of problems. I didn't understand the rally that we had last year and all these things. 2018 went straight up $65. I was poo-pooing those rallies forever. I was poo-pooing at 55 and I'm going to 65. So I don't understand why they all took off, but they did. Macy's got up over 40. Kohl's got up over 80. These things have all come back down to earth. I've always said if I liked any of the big three, Macy's, Kohl's, Nordstrom's, if I was going to buy one, it would be Kohl's, but I don't own any of them.
Wow, I can't believe it's 9 o'clock. I had totally lost track of time today. I would have liked to do some tickers from the chat, but it's 9 o'clock and I completely lost track of time. So I apologize to everyone in the chat.
It's been a good show. I feel tired today. I don't know why I actually slept, but I've been tired on this whole show. You can probably tell my energy level. I should have had some of that coffee there, Joel, from our buddy.
Good, man. I got it right here on Leonardo.
Leonardo, my wife actually tried your coffee and she said it was excellent. Excellent.
I haven't gotten to it yet.
I need to start drinking coffee, and maybe I'm going to try Leonardo's. Maybe he'll get me hooked on coffee. But my wife said
that's all you need, Dennis.
She wants more.
All right, a double endorsement from Dennis and Joel. I'll have to try this coffee now, but I have to grind it up first. All right. Thanks to both our guests today, Evan Schnidman and Marc Chaikin. Thanks to everyone in our chats on YouTube and premarket.benzinga.com. You can catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google. Please remember that all of the information from our show is for informational purposes only and not meant to be investing or trading advice. That's it. Everyone have a good rest of your day. Good luck out there. We will talk to you on Friday.